Welcome and hello to all middle-class investors. This is Seth Martin. It is February 11th. Thank you for tuning in today. I've got a chart of the S&P 500. This is the chart we generally start with, and the market has been going up and up and up. It's been actually fairly strong since Trump was elected, which was right in here, and it went up straight up, almost straight up initially, and then it's kind of just been grinding higher, I guess is the best way to describe it. What we're kind of expecting to happen is for the market to move up into this area right in here, and then get some sort of sell-off. Usually when these channels are this developed, they usually hold, and I would look probably for some sell-off, back into this area around 2250, and then potentially, one more run up. So that's what I see as of right now. Now it could be the one caveat to that is if we see a pullback to here, and then we see a run up to a lower high, and then the market starts to roll back over and breaks this low right here, then we could have a more serious topping process in place. So just stay tuned, and we'll be here to help you analyze that. But as of right now, I would expect the market to pull back, probably somewhere below this pivot right here, this most recent wave 4 low, which is right in here. So I guess maybe we draw a zone. A zone would be a better way to do it. So maybe right into this area, get a pullback into this area, and then rally to new highs. But if we don't make new highs, if it starts to roll over and then breaks this low, then there could be a more serious topping process happening. And I've got a couple of charts I want to show you, courtesy of Elliott Wave International and Investors Intelligence and some different services like that. We'll get to those in a little while. But let's look at the VIX. Let me close this. I get more chart. Let's look at the VIX real quick. I like to look at the VIX right after look at the S&P 500, and you can see the VIX is very, very low. This continues, in my mind, to be a challenge. Putting new money to work when the VIX is very, very low like this is always should always be cautionary. You can see it kind of rallied up, and then it's pulled back again. And I'll be honest with you, I didn't really think it would get. I didn't think it would take out these new lows here. So now we're trading. The VIX is now trading below this old area, which was more like 1180 or something like that. It's trading below that. So it's unusual for the VIX to stay low for very long periods of time. So I would say that we're probably close to some pullback, and maybe going back to the S&P 500 chart, maybe we'd actually don't even get to the top of that channel. Or if we do, it runs up very quickly and then immediately sells back off. So let's just go back and take a look at that, and I'll explain what I'm talking about. So what I mean by, gets there very quickly and then immediately sells off, sometimes in the market you'll see when you have like kind of a last gasp of enthusiasm, you'll see kind of a gap up. Let's say like a gap up to here, let's say, and then a run up, and then it turns around, sells off. So gaps up to here, runs all the way up to here. The bears come in and push it all the way back down, and you close here. So we could have something like that where we get a little bit of a throw over, or it just for whatever reason just doesn't make its way up to the channel and decides to pull back. Sorry about the in and out there. It doesn't make its way up to the channel and just decides to start pulling back from here, and pulls back to this previous ABC low. I don't know if you can see this, but you can see that kind of the market kind of makes this ABC pullback. And this is usually the place where the market wants to pull back to before it kind of regroups. It'll kind of chop like this, and then it'll start taking off, and make its way up to here. So that's what I see right now. That can change. I mean, we can definitely, we reserve the right to change our opinion. In fact, investing, sometimes you're wrong, and you need to be able to do that. So you shouldn't be afraid to do that. All right. Let's see. Let's look at the Dow. The Dow's, it looks the same, but it's actually a little bit stronger. So the Dow's been kind of grinding its way higher. And, the Dow, in a similar fashion, there's no channel up here, but we could see the Dow go, a little higher, maybe up into here, and then pull back all the way back down here and kind of reverse this whole move before making a new move higher. So I'm going to cover some stuff in a minute why I think that we're really close to a pretty significant pullback. Now, whether that pullback becomes the top or just a pause before the next little run up, that remains to be seen. But certainly we're at a place where there's a lot of exuberance and excitement and complacency in the market, and that's usually where turns happen. So we'll look at Germany, Japan, and the United Kingdom just because that's what we normally do. You can see that here in Germany, it's broken out of this channel. We've pointed that out. This is, for some reason, this is on a weekly chart. We should be looking at a weekly. And for several weeks here, we've been trading above this down channel. Could be looking for a pullback here before it maybe goes higher. Japan, we've got it's slowly grinding its way up into this area here. Looks like it will be there soon. That's something that we've been talking about ever since it broke out of this down channel. The United Kingdom to me is a little bit less. It broke out of this downward channel, but then this looks very corrective to me. This, let me draw it and show you what I'm talking about. Because this overlaps so bad, like from here down to here, and then back up here, there's a lot. This is very overlapping. This could be the direction of the trend, and this could be the counter trend move. So the UK is a little less clear to me than like Germany. To me, this is very overlapping, right? And this looks like the direction of the trend. And it could be, that it's pausing before it gets up, before it makes its way up into this area. Same thing with Japan. This part of the trend was very strong, so this to me looks like the trend, and this looks more like the pullback. So I think Japan will continue to rise a little bit here. Plus they're devaluing their currency, which makes, all things being equal, if you lower the value of your currency, then your stock market goes up. So it just takes more money to buy the same amount of goods. So that's why it goes up. All right, let's look at what do we want to look at? Let's go to the dollar, and then in a minute I'll jump to those charts I was telling you about. So the really big picture of the dollar, we had this big fall, chop, 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 and then we got this run up, and the dollar, it didn't quite make it to this area, which tells me that this most recent pullback is just a pullback. We'll probably go a little higher. Plus the euro still looks like it wants to go lower. So to me, you should expect something in the dollar that would make its way up into this area right here. that's, you know, that's it still looks like it wants to go higher. So, and more importantly, it looks like the euro wants to go lower. So that's kind of what I see with the dollar. Since we were talking about the euro, let's just go ahead and look at the euro real quick. It's a big picture on the euro. Went way up between 2000 and 2009 and has slowly been making its way down. And then it came to this support area. And then we got kind of parities down here where this red line is. And what I've been expecting to happen is the dollar to retest this downward part of the channel right here, downward part of this triangle, which it did. It went up there, and then you can see it immediately sold off. So, you know, I would say that the euro is going to kind of make its way down here to new lows. Whether it reaches parity or not, not sure. In fact, it's starting to look like maybe it won't now. So we'll just have to see. Whoops. I did it again. Let me see if I can get this off here. I hit the 5 instead of the 4, and it totally messed up my chart. So I apologize for that. Let me see if I can get it off of here. There we go. And go back to charts. Sorry about that, everybody. A little glitch there. Let's look at oil. So oil, you know, I've been saying that oil is probably going to make a new low. I mean, it keeps getting a little bit stronger. Now, we did have some news out the other day that, you know, the inventories were really high. So, you know, if that continues, then oil's going to roll back over. I just wouldn't be long oil here. It doesn't look like a good place to be long. You might wait and at least let oil pull back. If you're dying to be long oil, you might at least wait for oil to pull back to, you know, an area like, let me see if I can get on here real quick, an area like, you know, right in here. And we can look and see what that is in a minute, but it just looks like to me this sideways pattern could, you know, we've got a high here and a low and a lower high and almost a lower low. So once we break this is definitely going to roll over and start coming down. And if you are just dying to be long, if you think long term we're going to be, you know, oil's going up, or long term, intermediate term, long term I think oil will go up, really long term, but intermediate I think it's probably going down. But if you're going to be bullish on oil, you might want to wait till you get into this area right here before you become very bullish on oil. And that area right there is around $42, just under $42. So I hope that helps you. For those that are interested in oil, let's look at gold. Gold has been on a little bit of a tear. We've talked about, you know, we talked a lot about this downward pull here, and we initially said, you know, you could be long gold here, and then it came up here and kind of faked us out. But then it broke out of this down channel, and it's a good place to be long gold. It looks like gold is ultimately near term, intermediate term, however you want to say it, is going to trade up into this area right here around just under $1,500. But then I would look for gold to roll over and come down again over the next several years. Gosh darn it, I did it again. Sorry about that, folks. Just keep hitting the wrong buttons. I'm kind of not looking at the buttons. I thought I knew where they are, but I guess I need to go ahead and look. Silver is the same way, just looks a little bit stronger. Silver is a little bit more volatile, so that's kind of what happens with silver. Let's see. Let's look at, let me go to my desktop here and pull up some of these pictures I was wanting to. So one of these is the Dow versus gold. So this is the Dow right here, all this, and it's got some labels on there. So you can see 2, 3, 4, 5. So, you know, anytime after we have a 5, we're going to have a pullback to, probably the previous wave 4. But the interesting thing here is when you divide the Dow by gold. So in other words, the Dow Jones Industrial Average is in the numerator and the value of gold is in the denominator. We show this topping process that took place in 1999. And, think of this as the real value of the Dow Jones Industrial Average. So the real value of the Dow Jones Industrial Average topped in 1999. So another way to say this is if your account is not higher than it was in 1999, your net worth in real terms is less than it was in 1999. But you can see here that since 1999, this little move down was kind of an A, counter trend move, B, back up. You can see right here it says Donald Trump inaugurated. So we're kind of waiting for B to finish. And then after B, comes C. So C could be down here pretty low. So in real terms, there's going to be, this deflationary kind of move is going to continue. So that's something to be thinking about. Now, another thing to look at is it says fund managers record commitment. So what happens is, fund managers always have money committed to the market, but there are times when they have more money than other times. Sorry about that. My phone started ringing. I'm having all kinds of problems today with technology, so let me just turn that down in case somebody decides to try to call back. I won't talk to them right now, but generally speaking, they always have to be invested, but when they have very little cash on hand, that means that they're really not expecting a pullback because generally speaking, when they don't have cash on hand, let's say that like right here they had 11% cash on hand, they were waiting for more money, more of a pullback so they could get more assets to manage. Right now they feel like there is no need to have any dry powder, so to speak, to buy anything at a discount. They're almost all in, and so this is a record commitment on fund managers. And just anytime you have something like that, there's a strong potential for the market to roll over and go lower. So that's one that I wanted to point out. That's something else. I should have put all this in a different folder. Let me look, Dow versus Gold, big picture. So let's look at a big picture. So big picture, this goes back to the 1930s here, and you can see these. This was the end of the crash in 29, and then the market started to move up and pull back. So you get this 1, 2, 3, 4, and then there's this 5 here. So again, once you have a 5, you tend to pull back to the wave 4, the previous wave 4 low, which in this case it could be here, which was around 6,000 on the Dow back in 2009, and it probably will pull back there first, and then rally again. But then longer term, I'm talking like over the next 20 years or so, we could actually pull back to the 1973 lows. So this is very, very long-term, big picture stuff. But really what I want to call your attention to is this last leg up here that's in this box. And you can see we have a 1, 2, 3, 4, 5. So as soon as 5 is complete here, we're going to be pulling back to at least around 15,000, 15,500 on the Dow. And that's pretty good. That's a pretty good loss, in your account. So just be aware of that. It's you don't need to be fearful of it. There should be plenty of opportunity to adjust to it. Here's one more that I want to point out. This is says advisors fall in love with stocks again, and you can see that Investors Intelligence they report on this thing called the percent of bulls. And you can see here that we're at record highs. Actually, it was either Thursday or Friday. It actually went to like 68 or something, or 64 or something like that. So it's really, really high. And so just think of like a boat, like you're on a rowboat, and everybody, there's a shark on one side of the boat, let's say. So everybody runs to the other side of the boat. Well, what tends to happen is the boat flips over because the boat, has to be balanced. And that's kind of the way the market is. So once everybody gets on one side of the market, it tends to flip and take a bunch of money from the people that are on the wrong side of the boat. So just be aware of these things. They're important. They're important things to be aware of when you're dealing with your money. So I hope that's a good episode for everybody. If you have any comments or questions, you can comment obviously on the comment section of the YouTube channel. Also, you can write me at Investor Class on Twitter. That's the @ Investor Class. And sometimes I post articles there, make comments. I'm not a big Twitter guy because it's 140 characters, and to me, it's kind of a bumper sticker app. If you've got something really witty you can say, like that would fit on a bumper sticker, Twitter's the place to do it. But I guess I'm just not that witty. But anyway, so I would be looking for a pullback maybe midweek next week, and that pullback, could last maybe the remainder of the month. So just be aware of that, and continue to stay strong in the market. One thing we didn't talk about that I should talk about probably real quick is the 10-year yield. So this is something I've been harping on for a long time. So I'm going to talk about it real quick. I almost forgot about it. What we've got going on here is we've got a pullback happening in the yield. So in other words, this is a temporary uptick in bonds. So right now your bond funds, as this goes down, your bond funds are making money. But this looks very suspicious like a trend reversal. So once bonds finish their little run up, or yields finish their little run down, we should be seeing a very large move in yields to the upside. In other words, bonds very big down move. To the downside. So just be very, very careful in your 401ks if you have bond funds. Maybe not yet. I mean, you might hang on a little longer, but if you start to see this get down, if you start to hear, yields getting closer to 2.1 or something like that, you may want to go in and make some adjustments in your bond fund accounts. All right, everybody. I hope everybody's clear on that and it feels okay with that. If you have any questions, like I said, comment on the YouTube channel, or you can go to Investor Class @ Investor Class on Twitter and comment there. All right, everybody. Till next time, we'll see you. Bye-bye.